Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be doing our weekly stock market update and we're going to be looking at the SPY ETF as our proxy for the S&P 500. We'll also have a little look at the VIX and the PCC as well, and we're going to go through our bullish and our bearish counts and do some classical technical analysis as well. But before we begin, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally, Tier 3. For £15 a month, you get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you had chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening, guys, and now back to the video. Okay, welcome back, guys. A quick note about the Patreon advert you've just seen. If you do want to sign up, it is the 1st of February as I record this. Now at the start of the month is the perfect time to do it. Patreon does not charge you pro rata, so you will get charged the day you sign up, the first time you sign up, and then the first of each month thereafter. So I always encourage people to sign up at the start of the month. That way you get a full month's value. Okay, so enough of that. Now let's get on with the rest of the video. Okay then, let's get on with the day's work and get into the count. We've got bullish counts and bearish counts to consider. I'm going to try and keep this as simple as possible, guys, because to be absolutely honest with you, hand on heart, we're in limbo land at the moment, and until certain levels get broken, certain things get clarified, we can't be uber bullish or uber bearish one way or the other. And in my opinion, if you're unclear, the only right move is not to do anything and wait for more clarity. So let's just clear the count first and look at the classical analysis and see what there is here to provide an idea of what's going on. So we've broken trend, right, we know that. There you go. It doesn't matter whether we use a basic trend line or whether we use my pitchfork. Okay, we've broken trend. We mentioned last week that having broken trend, we have to give the advantage to the bears and see if they can push price lower in an impulsive fashion. That is up for debate whether or not they've achieved that, because we haven't got a clear 5-wave structure down from the high. If we did, I'd be like, alright, give the bears even more advantage. Weight the bearish case as higher probability. That has not occurred. Now, it could still occur, but there's an incredibly important level we have to watch in which it cannot transgress if it's going to. We'll come to that later. We've come back to the 250-day exponential moving average, and we have moved heaven and earth not to body a candle below it. It's quite amazing. Wick, 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 everybody above. So this is seriously strong support. In the meantime, there's absolutely no denying it, and it's resulted in a bounce. Now, I pointed out in last week's video that we had a strong weekly close, which was a sign of people coming in and shorting the market at the bottom and getting trapped. The liquidity trap for the bears. We spoke also about, in last week's video, the fundamental and very common behaviour of coming back up to test previous trend for resistance. We spoke about that. How this is a liquidity trap for bears who are foolish. This will be a liquidity trap for foolish bulls. Alright, and then everybody gets hurt. Right. Fundamental idea is still sound. It's just the way we've had to count things to get here is creating a bit of ambiguity, and therefore diving in long or diving in short, in my opinion, and this is not financial or trading advice, is not what I would be doing right now. So, what other things can we point to? Let's bring up our MACD and the RSI. So, we got extreme oversold readings on high volume. Now this is normally a sign of a low, and it was. Does it mean it's the bottom? Not necessarily. Could it be? Of course it could. You know, we've got, like I said, strong volume, the highest volume readings we've had since the breakdown early 2020. The highest oversold reading we've had since the breakdown 2020. So that if you were going purely on that, the market has either topped at a larger wave degree and we are all going to hell, or a larger wave degree within that even larger wave degree is completed and we're going back up. Right, brilliant, Tom. Yeah, it's great. That's really helpful. Sorry, but this is what happens sometimes. We're in a situation where we need to see certain levels broken before we can start to put weight one count above the other, but we will, and we're very, very close to that right now. We have a bullish buy signal coming up on the RSI, on the MACD. Hasn't occurred yet, but if the average goes across the signal, you can see how we've gone from this was bullish, this was more bearish, this was less bullish, this was more bearish. You can see with the histogram here this gradual increase of bearishness, right? Of more bearish momentum coming in below the zero bound. Bullish signal, green histogram that takes out this structure, continues to grow back to positive territory on the back of an impulse on the price chart. That's bullish all day, isn't it? If it's supported by an impulse. So we're at that point now where we've got a potential low, but is it the first move down or is the correction over? And that's the classical analysis state we're in. We're in a bit of limbo. So let's come in now and try and interpret the count. Now I'm going to try and keep this as simple as possible, because there's only two ways I can really look at it, bullish or bearish, and it's easy for two of those counts to get invalidated in the short term. If something else is happening, we're just going to have to wait and see, because I can't see it currently. So let's look at this interpretation first. Right, so wave 1, wave 2, back here at primary degree. All of this was primary 3, right? If we look at our moving averages, we can see once we complete intermediate 1 and 2, we get above the 60 exponential moving average, come back and test it, come back and test it, come back and test it, bounce, bouncy, bounce, bouncy, bounce, bouncy, bounce, bouncy, bounce, larger wave degree, intermediate degree, through it. Bounce again. Complete 3, through it, and down to the 250. That feels like a larger wave degree completing to me. What do I mean, how can I explain that in a layman's term? Where did I just put it? There it is. So, larger wave degree creates larger correction. Same here. Same here. Right, all of this smaller. Not having to come as deep for support, not creating as much volume on the sell-offs, not creating as many sell signals, not causing as much technical damage. It's basically it, really. This doing more technical damage, therefore larger wave degree. So this is, like I said, this is the bullish interpretation. The quickest and simplest one is this, that we've bottomed. Right. All the way back here at 359.04 is the invalidation point for this count. From an Elliott wave perspective, you could come all the way back to here but not through it and still be in a wave 4. Do I think that's likely? Not given my assumption of this being a wave 2. The wave 4 would look disproportionately big. Okay, so I'd rather it end here if it's right at all. Excuse me, just having a quick drink. So this is the quickest the simplest interpretation. But we've gone ABC into W, ABC into X, ABC zigzag here into Y, and now this is now bullish. Coming off of the low, I think the best I can do on the short time frame to support this idea, we still have strong volume coming up, right? We had the volume around the whole bottoming process, right? But we've still got volume coming up in what looks like an impulsive move. Best I can make of it, if I wanted to support the bullish completion, is that we've had a diagonal into a 1, A, B, C into a 2, and now we're going 1, 2, 3, 4, 5 into a 1, into a 2, and so on and so forth. Now it doesn't have to be an extension like I've just shown you there. It could literally just be 1, 2, 3, 4, 5 with no extended 3. Right. But that's how I'd get off the low at the moment. Right, and I would say this was A, and then this was the B, and then this was, it's either that or it's this here. I don't think it could be that, that'd be too short. So it's not particularly clear either way. Alright, so that's one way of looking at it. What other ways have we got of looking at it? I mentioned that vitally important level, we're going to have to discuss that now. So I'll keep the bull alternative up, get rid of the combo, get rid of that bullish low. Here's the flat. This is the flat. A, B, 5 waves in a C. If the market had been polite enough and considerate enough of us analysts to come down here in 5 waves, then we'd be screaming, you know, down here, look for bullish divergence between these lows. Alright, look for divergence in the volume, in the MACD, in the RSI. Okay, look for a weaker bearish low, essentially, because this is buy time. Because it doesn't matter whether this is A or whether this and this comes B before coming down in a C. That's the bearish interpretation, right? Or it's done. Okay, and you've gone A, B, C, 3, 4, complete, 5 waves down, and then this is 1, 2, and off we go to the moon. Okay, but the market is being a bit of a jerk. Now, I could have left this a couple of days and maybe it would clear itself up, but I've got so much work to do and I'm so busy this week, I've got to get it done when I've got to get it done. So, sorry about that. If this level here breaks, 4, 5, 6, spot 6, 2, then we either force fit 5 waves into 3, which I don't want to do, or we accept the fact that we didn't get 5 waves down here, because 4 cannot come into price territory of 1. At that point, this is not an ABC flat. Okay, and we have to get rid of this count, giving us the bullish alternative of the combination here, WXY. So they're the bullish counts, and that's now discussed the bearish count. Okay. As soon as I find the bloody thing. Bull primary top. Okay, so this is the idea that yes, we broke trend. Yes, we got significant volume. And yes, we came back to a major moving average. But we did it all because it's the start of something, not the end of something. We did it because this is going to be 5 waves down. And this was the high, and this is not a flat. Now, in order to get the high, I've had to be pretty flexible. From a small zigzag to a large time-consuming flat. Not particularly pretty. No way you're fitting that in a trend or in a pitchfork. But it's the best I can do to get the count to finish here. I cannot get the count to finish here in a bearish way and get this to go much deeper than it already has. Okay, not unless it's going to be some kind of annoying combination wave. In which case, we have to worry about that later anyway. In the meantime, 1, 2, 3, 4, gotta turn around and get down here before going across this level. 4, 5, 6, 4, 8, 4 cannot go across this level. Now if we do come down there in 5 waves, then we're good for days, because we've either got an A and we can trade into a B, right? We don't have to, we can just leave it, or we've got a completed C and we're going 1, 2. So 5 waves down is good news for us. It helps clarify everything. But if we come back up above this level, it's advantage bulls. Simple as. You know, and I know what the bears are going to say. Oh, we broke trend, everything's bearish, and you might be right. Okay, but the way I see it is weighting it fairly. You get back above this invalidation point and you break the idea of this being a motive wave down here. You break the idea of this being impulsive, at least. And therefore it can't be C, and it can't be A, and it can't be 1. Can't be any of those. It's 3 waves. And that's that. So what would you want to see now if you wanted to be bullish? Well, you've got to come out of here in 5. Right? Come back in 3, and that's when we get in. Because then we've got directionality, new high, impulsive move, back above previous trend. Everything looks good. Right? And you can protect yourself in case you are wrong. So if you do get up here and you come back and it's actually bearish and this is a horrible B wave high and we've all been fooled by 3, 3, B, and now we're going to go down here, well then you can use the first move off of the low and back to set up the standard trade setup and then move from there and have a tight stop in place. But I'm not trading this at the moment either way, because until this level gets taken out I have no confidence, not no confidence, limited confidence in the bullish case. If I get 5 waves down I'm going to feel happier. If we could just turn around and come down in one more bloody wave before taking this out, it simplifies everything. If it doesn't, you have to give the advantage back to the bulls in the meantime and see what they can do with it. And that's it. That's the way I see things at the moment. If we just have a quick look at the alternate bullish count for a minute, that this is 3-4. You know, what did we reach? I'm not sure if I've already done this. Well, I'm just reminding myself. Yeah, somewhere between a 23.6 and the 38.2, depending on where you top. So we've done enough for a wave 4 retracement. Okay, and that's the bullish count as I see it, the bearish count as I see it. But this has got to play down in another 5th wave to get this to complete as 5 for an A, or really bearish to get it to complete as a 1. Then you can do the scenario we spoke about, right? Where we go 1, 2, right near the tops but not through them, retest them, 3, and just wreck everyone in the most bearish setup. A nasty move from here would be 3 to new highs in a B wave, and then 5 down for a larger 1, 2. We won't know until we see new highs, because we will know as to whether we came up in 3 or whether we came up in 5. If you come up in 5, then you're kind of obligated to buy that retracement. Limit the risk and buy that retracement, I think, because then you're either going into the 2 was somehow here, God knows how, but the 2 was here and we're going into a 3, or more likely I think in that case we've completed a 4 and we're going into a 5. So on that note, let's discuss, if this count is correct, where the wave 5 target could likely be. Well, the 3 is longer than the 1, but the 3 did not come to an extension target, not 123.6, not 1618, not 2618, so it's a short 3, but it's longer than the 1. So the 5 has no upward limit on it. So in a situation where the 3 is longer than the 1, and we can't see an obvious extension in the 1, then we can give the 5 the benefit of perhaps being the extension. So in that case, the 5 could come 1-to-1 with the 1. Here's the 1. Here's the 4, assuming it's in. So the 5 comes up to here. Right, which is 560 on the SPY. 5,600 on the SPX, that would be. Right, but if you get an extension in the 5th, then anything's possible. And we can just balloon. We could explode, we could have a blow off top, something unbelievable happen. Well, I say unbelievable, it's not, nothing's unbelievable, is it, for God's sake? Let's just remind ourselves that the market is up to the highs 120% from the March 2020 lows. Okay, so the United States stock market doubled in under 2 years. So come on. As bearish as you might want to be, crazy is crazy, and crazy is always a possibility, right? So for the moment, hoping for a 5th wave down to clarify things, make things simpler. We can go A, B, C flat, we can go 1, we can go A, we can get some kind of idea, and then we can check that lower low, and we can check for divergent RSI, divergent MACD, divergent volume. We can check for all the things that tell us it's a weaker lower low, and then we can go long from there if you want to, because it's either a B or we're going up way higher to new highs. But that's the ideal. If we don't get it and we come back above that invalidation point, which I'm going to show you again, then you have to give the idea that this is completed the benefit of a doubt for the meantime. Feel free, if you're a member on the Discord, on the Patreon, to have a look at this and see if you can figure out a bearish alternative that doesn't rely so heavily on this pivot point, this invalidation point. I mean, the only one I can see is the idea that you've gone free, you're going to go free to new highs and then come down in a flat. That's it. Other than that, I think everything depends on either making another low or taking out that invalidation point. And I'm just going to carry on waffling now if I keep talking about it, so there's no point. We're in a state of limbo. We need to break that invalidation point, or we need to come down lower in 5 waves to make some sense of this. Sorry I couldn't get this out later in the week. Like I said, I'm exceptionally busy. I've got to do what I've got to do. But if we do see some significant price development here, I might well come back with a small update during the week just to keep you guys clued in. Alright, in the meantime, let's have a look at the VIX. I was obviously doodling earlier. What was I thinking? Oh yeah, I spotted this. Yeah, that's it. I spotted these trends, haven't I? So we've got this downward trend that we broke from these highs here. Right, we broke this trend. We've also got a rising trend line here. This high, this high, this high, this high, and we've got a long-term rising trend along the bottoms here that's been going on for years. So bearish case, the setup I would expect to see in the VIX is we are about to turn around into that 5th wave, come back to the trend. That would bring us down before the invalidation point here in price. And then at that point, the VIX will do one of two things. Well, it will definitely retrace, but it will either stop retracing and collapse back to support, or it will come down some of the way in what would be our B wave, rally, or our 2 if you're super bearish, and then it will go pew, and just take off. Alright, so that's the 2 scenarios I see really at the end of the day, and it does hinge on that invalidation point and whether or not we get a 5th and final wave down. And that's it, guys. So just keep your eyes open, keep watching that invalidation level, keep watching the price action off of the low. Is it impulsive? Is it coming up in 5 waves? Okay, does it look strong? Is it supported by momentum? Do we get back above trend? All these things, if we get through this invalidation point, we've got to be looking for. If we get a 5th and final move down, life becomes a lot simpler for everybody because we've got a completed impulse. And it's either a C in a flat, it's either a 1 or an A. And that just means a guaranteed retracement before coming lower. Or a 1 into a 2. See? Right, so that's it, guys. That's all I've got for you. I wish I had more. A quick look at the PCC, I should say. Sorry, we've been saying this for ages. You know, we bottomed around here. We continue to creep higher. We are going to do the trip from extreme greed and complacency to extreme fear and panic. That's what we're doing now. Problem is, it can take years. It can take years and years. But that's what we're in the process of doing. This thing just goes from fear, from greed to fear, greed to fear, greed to fear, mild greed and fear, to absolute greed, to absolute fear, and so on and so forth, and we're in the process of working our way back up. Loads of time to potentially get a 5th wave in on the SPY. Right. Loads of time to potentially get a 3rd wave in if it's extremely bullish. Right. So that's it, guys. That's all I've got for you at the moment. Keep your eyes on that invalidation level, and if I do get the chance to update you again, I will. I will definitely try and keep you guys on the Discord and my patrons informed. And on that note, if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to comment in the comment section below if you want to. Thank you as always to my Patreon subscribers. If you're interested in becoming a patron, it's the start of the month and the perfect opportunity to do so. There's a link in the description box below. Head over, have a read of the tiers, see if there's anything you're interested in. And if you're not following me yet on Twitter, please do so. I only ever use it though to notify people of new videos, so I don't end up chatting on the thing, but that's what it's there for. Alright guys, take care of yourselves. I'll be back with you later in the week. All the best. Bye bye.